All right, this article is coming from the fxstreet.com. This is USDCAD. Losses to extend towards the 1.34 area. So the USDCAD has slipped under 1.35. Economist at Scotiabank expects the pair to remain under downward pressure. USD is holding losses below 1.352. Short-term support, which points to more weakness ahead, and the breakdown from the late April, early May range suggests losses could extend towards the low, mid 1.34. Let's remember that 1.34. A low USD close in the week would boost prospects for more USD softness ahead. All right, so this other article is coming from fxstreet.com. USD CAD holds to losses near 1.38 after NFP, so non-farm payroll, which was announced on Friday. But we also had news coming out of Canada. They had their jobs report too. USD CAD held relatively steady towards or trading near the weekly low following the release of the labor market data in Canada and the US. So regarding the US economy added 253,000 jobs, surpassing the expected 179. So this is interesting. So the jobs report exceeded expectations, which would imply that the Fed Powell would have to raise rates, which would imply that the dollar would go up. But we actually saw the opposite, right? We saw the dollar crash or decline, and the stock market is, for the most part, relatively inverse correlated to the U.S. dollar because the stock market is priced in dollars. So if dollars go down, the stock market is going to go up, which is why we saw the equity markets rip to the upside, right? All right, in Canada, the unemployment rate remained steady at 5%, slightly better than the market consensus of 5.1. The net change in employment was 41,000, surpassing the expected 20,000. So after the release of the NFP, the U.S. dollar appreciated against most currencies, but the Canadian dollar outperformed due to positive Canadian dollars. So we did see initially a rip higher on the U.S. dollar, but it's the smart money playing games, right? They want to get short at a higher level, right, to maximize their profits. So this article is coming from the Financial Post. This is Canadian dollar on track for best day of 2023 on strong April job report. I mean, was it strong? Okay, I guess it was a double, 100% increase versus expected. You had 41,000 versus 20,000 expected job creations in Canada. Canadian dollar is finding renewed strength after a period of consolidation. Gains are being fueled by a surge in Canadian government yields after another solid jobs report. Higher oil prices. Oil ripped higher too. I think it was roughly $2 higher. It was oversold. Additional of the 41,000 jobs in April and a near record low unemployment rate has traders quickly scaling back expectations of a potential Bank of Canadian rate cut. So that adds to it as well, right? If interest rates go up, that currency is going to go up as well. So that's what I didn't know. Since reaching this weakest point against the greenback this year on March 10th, the loonie has climbed about 4%. Bets of additional rate hikes may emerge if inflation data next week shows price pressures remain stubbornly high. So I believe we get some inflation data coming out in the U.S. this week. So let's just go to the charts. And these arrows here, well, I was actually placing trades. I am going to get back into Forex heavily. So now just going to the dollar real quick. Just want to show you this. Let's go to the dollar. Let's go to the hourly chart. And non-farm payroll came out at 8:30. This candle here, you can see how it ripped higher, right? And then collapsed. come on, it's the smart money just playing games, right? Looking for liquidity to push price down. Just out of curiosity, let's see if it came into any zones. 1 hour. Let's see. Where is my volume? Let's refresh real quick. There we go, volume. Okay. Let's go back down to the hourly chart. The Dixie we want. Oh, okay. No volume on Dixie. It's an index. Nevertheless, looking for, here might be a level here. I was looking for a sell level. Potentially we had it here. Right, this was a false breakout to the upside. You had resistance, and this appears to be some sellers in that area there. All right, so let's go to the USDCAD. So again, if the Dixie is selling off, the USDCAD is moving higher. Sorry, moving lower, right? Because the USD is getting weaker and the CAD is getting stronger, which means the pair is going to decline. Now, this was the pair I should have shorted. Looks like I did place a trade, I don't know, back in 23rd, but this was the pair to short. I did get long. I did get long on the British pound USD, but this was the opportunity, the bigger opportunity rather. Okay, so let's just look at the charts from a multi-time frame analysis, starting with the monthly chart. And I'm going to take off this line here. I had 1.4 as that was where we had monthly sellers. Price nearly came into the level, and then it started collapsing. You know, you could say that for the past 6 months, 7 months, price has been range bound. So what do you want to do? You really just want to play the extremes, right? That's where the imbalance of buyers and sellers are. All right. Let's go to the weekly chart. And, you know, I talked about the rangeness on the monthly chart. It's consolidation, right? After price was steadily rising, creating higher highs and higher lows. It was also supported by the moving averages. And now the moving averages are kind of just sideways, right? Kind of confirming that price is range bound. However, you can play the extremes. And we had a couple of times where price came into the daily bias level at 1.325. Let's look at that on the daily chart. So we have a level on level, meaning a daily bias level on top of a daily bias level. This is the strongest type of setup you can have when trading supply and demand. So, you know, we had a rally in price, base and candle and a rally out, taking out the pivot highs to the left. And then you had another rally, which is a legging candle, two base and candles, and then this huge move out, right? I told you that there were buyers here. So what did price do when it came back? It pulled back, right? This was good for, I don't know, roughly a 3-to-1 reward risk ratio. And then it came back again. Surprisingly, it penetrated the zone less than it did here, right? I would have anticipated that the second time price would pull in deeper into the level to get any remaining unfilled buy orders. And this was good for, I don't know, 4-to-1 reward to risk ratio. And now we see, again, price within this range. This was a good level. That was resistance, support becomes resistance, right? And then you had the collapse. You have a double top. Let's just all right, so this is a cool setup. And I'll have to get into some setup patterns in future videos, but essentially what you want to look for is if price comes into a level of interest, you want to see a break of trend. And then typically what happens is you wait for a pullback before, in this case, shorting. This was Friday's candle. That was almost 200 pips. All right. So I anticipate price. Well, it all depends, right? If we have inflation news coming out this week from the U.S., not sure what price is going to do next. However, the liquidity is further down. However, if I had to give you a macro answer, let's go to the monthly chart. Yeah, it's hard to say. I mean, on the macro level, price is still in an uptrend, just consolidating at the moment. So I'll have a better indication of where price is heading next week or midweek after news out of the US comes out. Thanks for watching. Subscribe. Please like the video.